Ladies and gentlemen of the crypto space, we're live on Wednesday, October 16th at 12:26 p.m. Better late than never. And possibly it's visible that I got a decent sweat going on. I had a bunch of relatively large pieces of furniture to move. But in any case, the captain is prepared and ready to talk about a little global finance on this Wednesday with Bitcoin at 67,600. It's the quickness of the move between 62 and 67 means it's a relatively trivial move in the grand scheme of things. It is not broken out at all. We are still very much in a structural trend that has started since March of this year with lower highs and frankly lower lows structurally. Note that this is a weekly chart, so we have had higher lows on the weekly since August, September. So it does appear like we slammed right into the 50 SMA on the weekly, and that is a relatively constructive presentation. Constructive in that I like what I say. This has compression written all over it, higher lows, higher highs in the last couple months. So it was a little bit uncertain, maybe a broadening megaphone to some degree up until August, but now we're getting higher lows. So it could revert and we get a lower low down here to 47 in Q4 24, and they have a continuation of somewhat of a broadening megaphone, something like this. But I'm not too keen on that interpretation necessarily. I'm more so interested in seeing this 50 SMA hold to the bottom side. And on this weekly, we could literally have on this weekly candle a breakout to the upside. And all you need is a relatively marginal breakout to the upside. And you're talking about like up until 70. You could even go to like upper 60s. Anything from here on a weekly close is pretty much a breakout. And then what you want to see is a little bit of consolidation, maybe a week or two, retest from the top side back down to 67, and then you get your higher high. That would be zooming in, zooming out, and you get your trifecta of bullish confluence type pattern. Something like that. Something like that. You know the deal by now, what the trifecta looks like. Okay, okay. I want to circle back around and give people a little bit more structure to how to think about capital management, which is something I do ever so often. You know, one of the most important things about capital management is to divest yourself from the price action, from the act of reaping rewards, because that's investing. Investing has nothing to do with trying to necessarily find the fastest horse that's moving right now. Trading, a breakout, slam in 100 grand, rip 20%, dump it. That's trading. That's player versus player. That's adversarial. And sure, that's a valid, viable method of engagement with capital markets, but that's not what we do. That's not what we do. We are the place quarters on the railroad tracks and wait for the train to cross because somebody could spend an entire year trading, trading, trading. 20%, 20%, 20%, bop and weave, quick 50%, leverage, quick 200%. Woo, end the year on a 500%. Or they could place quarters on the railroad tracks and end the year at a 500% or 10x, 1000% without having to do any of that work. And that's more of a lifestyle that I want to live. And the only difference is instead of trying to find things on a relatively short term time frame, I see a weekly breakout, a daily breakout, LTF, hourly. You catch those double digit percent moves. I'm just looking at a much more structured perspective on markets because I know heading into 2030, this whole space is going to run multiples. And it's not just space. I'm not talking about a TVL perspective. That is the most short sighted perspective of how to understand the structure and status of a market, the dollars. Now, the title of today's stream is all about dollars. I'll pull it up. Let's talk dollars. It's a relatively short list. How would the captain move forward with credit facilities available in the crypto market? So, how does it play out when the market finally breaks to the upside? What is the market like? Now, I'm not talking about global financial markets. They could be a fucking shit show for all I care. China is literally experiencing a 2008 right now, and they're trying to print their way out of it, much like we did in 2008. And they're going to try and get their, M1 expansion to get a credit impulse to grow it beyond M2, so M2 doesn't deflate. That's basically where China's at. So they need a strong credit impulse, and that's going to flood the system with collateral. And over the coming 1, 2, probably even longer years, a little bit uncertain territory over the next 2 to 3 years. Because as they flood the system with collateral, they're exporting their deflation. We've talked about this, and that's going to cause everyone to have to flood the system with collateral, basically devaluing their respective currencies over and over again, which is a process of exporting deflation to the next sucker down the line, with it all ending at the United States. So this all ends just like the US is the last to start cutting, so to speak. Uh, we will be the last to export the deflation as the roost or the chickens come home to roost, as they say. And the chickens will come home to the US with this yield curve, as everyone talks about, all the doom and gloom. It's just you need to put it into perspective of how that doom and gloom folds into the behavior in capital markets, and not just each individual market, the overall market, which is why, ladies and gentlemen, we started in China. We're not even we're not at the point to talk about the US. We're talking about China right about now. And then we probably talk about Japan, and then we eventually get to Europe, and then we get to the US at some point down the road. Okay, okay. Dollars. So imagine 2020. So a lot of folks probably don't know about 2020. They know about COVID and whatnot, but they don't know really what occurred in 2020. Not only what we did, but structurally what it meant to the system. The most important thing to really understand right about now, as folks are chasing whatever the fuck is hot on whatever chain you think is meaningful. So anytime I get a little bit of an appetite and I'm like, oh, maybe I missed something and I really should have an allocation, I give it about a day or so. I sleep on it. And I'm like, yeah, that's small potatoes. That's small picture. There's something much bigger at play right about now. Something much, much bigger. And I don't have a full, clear picture of it because that's how big it is. Now, what I try and project or try and imagine is 2020 with established, robust, functional credit facilities. I mean, maybe you had a little bit of, sigh, and then die came online. And then you had Aave, of course, which was like a money market, which you could deposit collateral and borrow some shit. But there was no go. There was no printing of dollars. There was no increase of endogenous currency. It was literally USDC, USDT, and a little bit of DAI. And DAI, maybe made its way to a bill or whatever the hell it was back in 2020. Been 180 something billion dollars worth of capital in these crypto markets, 80 plus billion dollars on mainnet alone. Vast majority of it is USDC and USDT. What happens? What happens when 2020 meets the likes of these protocols? Because this is all I could really think of. Curve and now DeFi money. So that's new. But I kind of ordered this maybe from interesting. Not no, not really. They're all significant in their own respect, in their own regard. Um, Inverse with Dala making inroads at what are they up to 1 billion? Where is Inverse? Where is Inverse? Inverse Finance first on the list. How much Dala was in circulation? I saw it somewhere. That's there was a lot of Dala in circulation. Transparency. Stop zooming in. Dollars 122 mil. Okay. I mean, obviously, Frax should be on this list as well. Um, Frax, do I have their balance sheet? Ah, there it is. That's convenient. We'll put that here. So, Frax, circulating supply 667 mil. I mean, come on, that's significant, and I wish I could update this right about now. Oh, I can maybe. Definitely needs to be on that list. Thank you very much. Thank you very much. $667 million at private credit in about 4 years, give or take, or less. Oh my God. You talk about micro cap, startup, home brew, homegrown, off the radar because it's a relatively sophisticated fintech product, the concept of private credit and dollar liabilities. This type of business doesn't exist in traditional finance, not in the same way because of the way the regulators create the relationship between the private lenders and the banks, and the private lenders probably circumvent a fair bit of that regulation and how they gain access to the liability side of the bank balance sheet. They're probably selling the bank's balance sheet because that's kind of what the liability side of a bank balance sheet is. It's basically a product, a fintech product, which carries an interest rate. Go figure. So these assets are not really dollars, not really dollar liabilities in the traditional sense of the historic banking system. They have novel characteristics. Obviously, they're fungible and portable. And that's an ancient talking point at this point. But I would say they're more akin to an asset. Why? You literally have the SEC and the CFTC fighting over declaring all this shit securities and commodities. So it's not money. Isn't that fascinating? That's something that nobody else has mentioned. You literally have these two branches of regulatory authority, SEC and CFTC, claiming all this shit, fracks, USDC, USDT. These are all securities or commodities. No one. So it's literally the antithesis of them declaring it money or currency. So how does that play into other regulatory authorities that want to take their cut on money, like gains and income? That plays an interesting role in the way the words, the semantics of the law is written. That's an entirely separate talking point because I sure as hell read the law, as you guys are well aware at this point. So, Curve coming in hot with 62 mil. This thing's brand new, but DeFi money launching on base chain. Are they going to throw Arrow as collateral? Is it possible base chain is the first to get the generate? Why am I saying this? Okay, you got to understand vested in, no, not vested interest. You got to understand the population of people that are actually engaging with crypto markets with respect and kindness and not being derogatory. You got people with average capacity buying meme coins. Some are quite astute, predatorial. Most are submissive, degenerate, unknowing victims. I think those are decent words. I think they're empathetic words. Um, so we've yet to see the degeneracy. So that is probably the best expression I could have to the point I'm trying to make. Even with all this meme coin shit going on, boop popping off on Arbitrum, whatever the hell is going on base right about now, because Arrow is literally on fire. Yet nobody knows about the credit facilities yet. I've said this for months at this point. This shit hasn't started yet. You'll know when the cycle has started, not only from like a Bitcoin breakout type thing. Clearly that'll occur, but because of the credit. Y'all remember Abracadabra back in 21? Y'all remember Spell? That's now blocked literally everywhere, and it's a real pain in the neck to access. That's besides the point. You can't access Spark either, which is USDS and the DAI upgrade. I mean, they literally abandoned their traditional branding. I don't know about that shit. A lot of money though. Half a bill. I think 100 mil was placed on Aave and USDS. I mean, it all adds up. Dyads on the list of stables that are interesting, and obviously Go. Go is going to be quite interesting because that's big brand Aave. That's an established, deterministic, immutable set of contracts. Very, very interesting what's going on there. So imagine 2020 and the frenzy, but the folks that have relatively average financial competence just are starting to realize what the hell credit is. I mean, I could I could buy uh, I could buy Doge. Pick a meme. Skibbity. Skibbity's probably on base somewhere at this point. I'm sure it is. Or Solana. So I could take my $1,000 worth of meme tokens and leverage it. Probably not the best thing for a provider from a risk profile because you get your liquidation cascades. That's probably not the best example. But I could buy $1,000 worth of Bitcoin and leverage it to buy something with an increased risk profile. And now I have exposure to Bitcoin appreciation as well as some meme coin that's going apeshit vertical into the stratosphere. Credit, credit, credit begets credit. I make my gains on the skibbity. I buy more Bitcoin. I borrow 5%, 10% more money. I'm aping into something else. I make some more gains, rinse, repeat. Credit facilities. General public has never used credit facilities like this. These credit facilities that we have access to right now did not exist in 2020, did not exist in 2021. I mean, MIM and Abracadabra, that's just the tip of the iceberg of what we have right now. These systems have survived 22. These systems have been tested and will be used not just by retail, but by more astute, more calculated types of actors because they've shown that they have a degree of resiliency, predictability, and they're robust. Quite remarkable what these systems experienced in 22. The fact that Abracadabra survived that, I think they get it. I think they know they need significant vote rental capacity. And lo and behold, they've been renting nonstop every week, nonstop. They rent what they can, but they understand the cyclical nature of building liquidity and that liquidity's revenue being redirected to vote rentals. So you get capital efficient liquidity financing, and that helps maintain PEG. Now you have your new iterations, your next generation dollar liabilities, which is a leverage instrument, which is a dollar, no real difference. And that's such things as CRVUSD and money. So dollar is interesting, money is very interesting, and MIM. So MIM in the broadened name, Magic Internet Money is very memeable. Dollar's memeable. Money is probably the most memeable dollar right now. And that shit's about to head to base chain. That's quite interesting. Doesn't have to be memeable to be a significant piece of tech and a significant product. It could be a very successful business, hence Frax. I don't think it needs the rebrand at all. And USDS and whatever, and all of them, even CRVUSD. Call it whatever you want. The meme component just attracts a particular cohort. What people really want is to see liquidations and protection of their collateral and how much leverage they can get. So notice this little section I got right here. That's the entire crypto space. I mean, clearly you got KeyDAO. It's still there, but it's my. So I should add that to the list. If I don't have it, I'll add that to my list. Boop, boop, my finance. So they survived. They pivoted. Yeah, about 19 mil. That's small, but it's all right. 903,000. Looks like they're still predominant on Polygon. That's cool. That's cool. Polygon's still significant. Still got that India narrative I always talked about all those years ago. But what do you got? You got one, two, three, four, five, six, seven, eight, nine, nine, because this is Sky and that's Spark. You got nine products in the entire crypto space dealing with credit. And that's including Aave, which is not, it's also a money market. And this isn't including like Aave forks or perp protocols with leverage and shit like that. I mean, this is literally like circulating dollar liabilities, stablecoins, endogenous stablecoin, not USDC, not USDT, but shit that's printed in the crypto space. When is top in crypto markets? When this shit is up and to the right, damn near exogenous stablecoins analytics. So we can go over here, stablecoins. Right now, it's all USDC and USDT, all 119 bill, 34 bill. When you see $100 billion worth of on-chain liabilities from 150 grand Bitcoin, $100 billion. You know how much interest expense, how much cash flow there's going to be on $100 billion? Now, folks have conviction like Bitcoin is going to break to the upside. Watch, check this out. Check this out. Let me talk to you guys about conviction for a second. $67,582. I have the biggest feeling that Bitcoin is going to break to 70,000. I take a 50x long position. I got conviction. Okay, that's fine. That's a form of conviction. I have the same conviction. My conviction is with dollars. And I have the entire structure of the global financial system behind me that these products are going to be the biggest in demand product in the entire crypto space. Credit, credit to print dollars. And it's staring everyone right in the face. And it's overlooked because it's maybe the simplest part of the financial system, but it's the biggest business on the damn planet. So that's an interesting comparison of conviction, and that's my conviction. I don't give a crap if someone's pulling in 50% here, popping and weaving, quick 100%, quick 200% on 10% of the portfolio, boom, 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 end the year up, you know, 50x. You get the right trade, yeah, 50x just doing nothing, just owning it. This is something that comes to fruition. A protocol that's consumed, that's repriced to the upside vis-a-vis adoption. Anywho, that's my list. That's a hell of a list because that is a short list. I am very curious where I levered up with DeFi money exposure. See what kind of points they offer and what those points translate to. They've just popped it out on base like nothing, and apparently you got layer zero. OFT, omni-chain fungible token integration is just like boom, boom, boom. You can move your money cross-chain. So obviously you need liquidity on a respective chain, but that doesn't neglect you having a capacity to just pop, 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 move money anywhere you want. That's another story. Two different components to the conversation. So this is very interesting. So I'm very curious how this plays out, especially on base chain. Probably base chain, and this stuff's not going to hit the Solana in the short term. Solana's still this like isolated island of capital. There is bridging, significant bridging between Wormhole and Thor and a bunch of other stuff. And Tapioca, I believe, said Solana. Anywho, point being, especially base chain, because that's just where degeneracy lives. It's just such a particular cohort of persons that interact with Coinbase, and they the younger generation, and they pop $100 on Coinbase, and they're like, "What am I going to buy? Bitcoin, or I'm going to buy some skibbity toilet shit?" So they buy their shit, and then it goes up, and then they sell it, and they buy some other shit, and then they realize, all right, I'm going to put on my Coinbase wallet and engage with Base Chain because they're young and hip, and they saw it on YouTube or TikTok, and they're like, "Oh, I'm going to leverage my $100, and I'm going to borrow $50. I'm going to also, instead of just buying Skibbity, I'm going to buy something else. I'm going to buy some Andy to top it all off." So that is something I think is going to be interesting for Base Chain. What we need probably, if if one of these, and it's only 9 protocols, if one of these protocols had a credit facility fully deployed on Base Chain, DeFi money, and you throw together the TikTok videos and you get that shit viral, talk about Coinbase, Base Chain, and Coinbase Wallet. Yeah, that could be quite interesting because that's the cohort for the that Base Chain caters to. It's not the sophisticated chain. That's not the $100 million, or contributing to 80 something billion dollars worth of financial capital. That's the younger generation. I'm not too derogatory of the younger generation. My kids are part of that Gen Alpha. The Gen Alpha is post 2010, by the way. My God, I'm so old. Post 2010. Shit. I was born in the 80s, so there's going to be a time in like the 2050s that people are going to be talking about, like, like kids are going to be talking about me. You were born in the 1900s. So you like, damn right, little motherfucker. I was born a long time ago. Oh man. So I'm getting a kick out of this because this is CRVUSD with Gen Alpha branding. And that's kind of what Curve needs. So what would be nice to see is serious coordination between ST CRVUSD and money. And clearly there's points involved. So we're talking about some sort of synergistic token launch, maybe something directly tied to the CRV. That would be most interesting, obviously, for a person like me who has a great vested interest in the Curve protocol. Um, I don't know. I mean, 45% is insane on dollars, and these points just keep adding up. So I'm very curious to see what plays out here. Very, very curious. Anyhow, we'll pull up the DeFi Llama as we talk a little bit. I'll go over the comments right about now. Let's see what Arbitrum is doing because Base recently topped Arbitrum and TVL. The TVL, as you guys are aware, means very little to me because TVL is like talking about M2 versus M0. I don't give a shit what your assets are priced at. I care about how much base fundamental capital there is, which is currency units, because that's what everything is derived from. That is the source. That is the reduced amount of capital. If every asset is sold, the maximum amount of money it could be sold for is the amount of dollars that exist. And that is why it's the common denominator. So I don't care about that metric TVL. I care about dollars. $4.5 billion in Arbitrum, 3.7 on base. Solana trailing base a little bit. Optimism far behind. Phantom's going to take some time to catch up. They need that Sonic release stat. Binance Smart Chain still has that 5 bill, so I don't know what the hell. Those transactions, have you done any transactions on Binance Smart Chain recently? They are so freaking expensive. It's like 30, 40 cents a transaction. What? Cross chain could be like $10. And I'm like, get the hell out of here. This is such a weird world. I feel because I come from a world in a in a land far, far and away in 2020 and 21 where none of this existed. You gotta understand that. None of this existed. There was no cross chain. There's no Stargate. There was no AWA. There's so many cool protocols nowadays. I found this. No, no. I have a whole list. Not this. I keep the list on our Discord, by the way. Let me stop my screen and re-add so I can share. Present, share screen, entire screen. Yeah, you can take a look at the whole screen. What we do? There's nothing there. So, but here's Discord. If you go to L2 Thoughts, there's just so many protocols. Odos, everyone knows Odos. Layer swaps, hot, across, Mayan, Rhino, Socket, AWA. Here's across. CCTP money, Xlink, Skip Pro. I just came across so much shit. And then you have these off ramps. All this ways to spend dollars. It's really cool. Really cool. Um, did I close across? Dollars. Close analytics. Launch pass. I don't need that. Oh, that's biz. I don't need that. I need. This is a great protocol. Where's AWA? Yeah, I'll put that next to AWA. Or did I? No. Yeah, cross works great, by the way. So you got Stargate. So I could probably put a new one. Let's do this. Add tab, new tab, bridges, bridges, and then we'll put AWA and a cross. Those are like my go-tos. I think probably put because I have stuff that I need to transfer from Cosmos hubs. So Thor Swap does that well. But I love this. This user interface, it just works really great. And guess who powers this cross-chain product? Her. Wild. Thor Swap does a great job across, as I said, for the 10th time. And Stargate, which is well known and very popular. Um, let's take a look at the charts as we talk. 67,779. Absolutely incredible price action today. Fugo in the house. Woohoo! My man. Cloud Llama, good morning. Arrow, good morning. Poker, Chump, Chump, Beat, good morning. Critical Mass in the house. IWIMDC, Sir Joe. John Steps, Bitcoin USM2 adjusted to dollar setting, unbelievable, perfect inverse head and shoulders. You're comparing it's just US and Chinese M2. It's a very isolated. I mean, yeah, M2 plus. Yeah, yeah. We'll take a look. I mean, it's very similar. Very similar. This is dollar supply, but um, maybe even I like M0 because that's really the ultimate amount of dollars that actually exist. Period. Everything else is the derivative, even foreign currency, which is a fun fact, because it all gets absorbed into the dollar if the whole system explodes. So check out the actually this is quite constructive from a weekly. Holy shit, look at that 100, 200. 1 second. Wow. This party hasn't started, ladies and gentlemen. I mean, we're looking at US M2, Chinese M2. But I don't know. That's an isolated because where's the rest of the G7? But this is the vast majority of currency units aside from Japan. Maybe we throw in JP M2. But you need dollar denominated. That's the thing. So we're looking at just dollar supply and their denomination. We need to adjust it for the cross currency value. How many of their units? It's like divide by. Uh, need to take divided by what is it? JPY USD. You do stuff like that, and that gets you real adjustment. And this is just literally a mean regression on the weekly, by the way. This Bitcoin from a Japanese the time weighted average price. Crazy. Look at that big breakdown, retest, breakout to the upside. I mean, this is literally, ladies and gentlemen, a perfect expression of the trifecta of bullish confluence. Time weighted average price. I love time weighted average price because that's right down the pipe. Kind of like an average SMAs. People love their weekly 21s and their whatever 200 daily. I don't give a shit. I like right down the average because they all correlate. I look at a 200 on the monthly, it probably or rather, I look at like 100 on the monthly, it correlates like a 200 on the daily. So we're all looking at the same shit, no matter what anyone talks about. But look at that beauty. Look at that breakout, retest, higher high. That is a beautiful trifecta of bullish confluence. Absolutely love that stuff. Let's go back to just Bitcoin. Okay. Uh, Logarithmic, so we don't want to remove our eyeballs. We'll go to the weekly, and we might as well draw our line to see when everyone on social media is going to start screaming. This is pretty much what everyone's looking at right there. Got a couple of touch points, more or less. Pop it up another tick. This is what everyone's social media is going to be talking about. You got to break into 68 to 70, and they're like, "Oh, it's breaking out! It's breaking out!" And I'm like, "All right, you need your confluence. You don't have that yet, and sure as hell don't have a breakout yet. There's nothing structurally bullish right now. It's not like you're blasting off and it's like higher high, higher high, higher high, higher high, 100 bill market cap edition, left and right. All coins are ripping, everything's ripping because that's what it is. That's a bull market where everything's like CRV USD at a $500 million, going across $1 billion and $1 billion. What's $1 billion? $5 billion, $10 billion. That's where all of this is heading. What's the kind of cash flow I want? Hope that helps. Is that what you did there? Perfect trading view. Oh, you did. CNM2. You did cover more M2s. Okay. Yes. A dollar denominated because everything returns to the dollar anyway. Cloud llama directionality. Directionally? Direction. I understand what you're saying. I see the yield curve bear steepener with the 10-year getting 5 to 7% over the next 5 years. It's not going to be weird. Weird. What are they going to do? So the question isn't are they going to do something? Is what are they going to do? And all right, great. It's still a binary reality. This whole system. It either blows up and Immortan Joe is our president, or all this shit ends exactly where we know it's going to end. Disparity, civil unrest, where the few have the majority of assets, which is literally the case right now. Most people don't own anything. Don't own anything. So if you own things, all this shit goes up in price. It's the most obvious thing once you're like, oh, that's what's been occurring for 50 years. You just had to buy anything that was interesting. And now, fortunately, there's an entire, sector of economics that's interesting that only small part of the population understands that has had the luxury of front running the larger part of the population. Arrow, I'm never able to correctly optimize voting on kingdom projects. Can you please talk about your voting strategy for Ram and Nile? Yeah, Nile and Cleo are dead. Dead to me. It's been horrible. So I call it flows nowadays. It's useless. I get literally nothing. I was literally just what? Concentrated liquidity. You vote on You gonna connect or what? There you go. I just voted on the CO. Well, actually, this past week, I think I just voted on zero WETH. It's done. There's no volume, and the Nile token has been decimated. It's down 90%, bro, since we bought it. So Clio and Nile are dead. I wrote those off as losses. That's okay. Um, USDC ETH. Uh, yeah, you want to see how you vote for 52 fucking dollars, motherfuckers? Fucking shit. That's horrible. USDC 386. See, the problem is, where are we? 63%, 386. I mean, maybe that might actually be what, $119. Whoopie do. But look at the volume, 386%. It's just not much volume. So the problem is you need high volume to get that consistent payout, and it's just not there. I mean, this is probably a quick. So I want to take a look at one thing first to remind myself. If you go over here and you go over to stables and you go over to Onea, if I could click it without being too trigger happy on the clicker. USDC dominant chain. So what I would do probably right about now is I'd go 33% USDC Nile, 33%, and then USDT US. It's a USDC chain though. USDC ETH. USDC. Can't vote on any of these. $14. $14. I mean, I'm just wasting my time here. USDC Nile. WUSD. What? USDC Nile. USDC Nile. All right, fine. I don't give a shit. See, that's the thing. It's just such a shitty amount of revenue. It's like whoopie do. Get it done with. Could be and that's why I've been focusing on like Ramses to be a little bit more strategic because it's all about level of effort versus return. Is it even worth it? And is this ever going to connect? Because this has been slow a little bit. Okay. All right, good. Now I'm getting my voting in while I'm on stream. I don't have to do it later. And this thing is just a waste of time. I just had this is like 2 months worth of savings right here. MFWF, call it a day. MFWF. Now Mantle is a USDT dominant chain. Mantle, USDT dominant chain. So USDT METH 33, WE 33, and all right, give a little something to Clio, whatever, $16. I mean, literally talking about $50 there. Whoopie do. Click it, done, done for the week. Don't waste my time. Move on to something more important. Much more sophisticated implementation on Ramses because I threw capital in 562, 217 on Tapioca. That's cool. With $47 on the eight, but there was other claims as well. I think there was like probably $100 so far for the whole week, which is like 27%. All right, great. Yeah, tack on the 14% for Ramses. So I'm going to keep this. Let me go back. Let me just see how balanced is this thing. Still got 3 ETH. I got buying capacity. I got selling capacity. It's right down the pipe. I don't need to rebalance. Call it a day. 100. I mean, this is probably not serving myself as best as possible because that's only 148 considering the volume. Like if I go like this, if I take this out and I take out tapioca and you do like the big bubba, The big bub is the USD, ETH, USDC, and zero ETH on Ramses. Those are where all the volume is and all the rewards are as well. So we're talking about 33, 33. I mean, it's not much better. Take a look at sort. Oh, interesting. Well, they got that. No, it's some individual maybe threw some liquidity on there. It's only 2 grand producing $4. You see, you can't vote on these things that are producing $4 in transaction fees. You don't get paid anything. So in some regard, the sort is rewarded. And if you have any decent sized Ramses position, we could probably carve out a little something um, by finding. Look, but that's actually. Let's take a look at incentivize for the fun of it. Wow, 18 cents. Because Frax is throwing around stuff. 19 cents. So look, it's 1:11 p.m. on October 16th. There's 6 hours and 50 minutes until the epoch flip. Based on initial inspection, I shouldn't even vote on my tapioca LP. I should vote on Frax. $235. That's the outsized return. So what am I going to do? What am I going to do? What is the captain going to do that's most rational? I'm going to go over here. I'm going to uncheck that. I'm going to go here. I'm going to click 100. I already selected it because I already voted for it. And I'll take the 148 instead of the 250 and incentivize tapioca because you get the 150 there, and I'm also getting transaction fees. So it probably evens out to be the same damn thing for $50. And at least this way, I have some LP that's contributing to relative health of the ecosystem. That's got a fair bit of volume. This tapioca LP, 6 grand worth of volume on 27K worth of liquidity. I mean, it's not big numbers, but it's there, so it's meaningful, as in meaningful rather than completely meaningless. Hope that helps, Arrow. Personally, Velo and Arrow, and throw that shit in a relay and call it a day. So I very much look forward to Kingdom the three, the whatever. I very much look forward to that. And I would hope that they took some pages out of their peers, particularly with regard to um, relays dashboard. Where's the lock page? I'm on Bob. It was on Bob chain. But look at that fractal. That's pretty cool. Go over to lock and you see your relays and you lock it and you call it a day. 25%. 25%. Okay. Okay. I mean, listen, 25% in meat space changes everything. You're not getting 25% in meat space. Let's take a look at Arrow because this thing's cranking lately. That's all marginal. It's marginal stuff, boys. It's all tiny potatoes. To remind you why it's such tiny potatoes. I mean, look at this market cap. You're at 889 mil. You know, you get it $6. It's a 6x, 600%. Or a 10 mil market cap asset goes to 1.5 bill. And that's going to 6 bill. So this is how you size your positions. You might actually need a larger size position of Arrow at this point in order to have that well structured portfolio. Right about now, I'd probably be more interested in Velo, which is actually how my portfolio is constructed, considering its cross chain implementation. 82 mil market cap, 90% cheaper, 1.4 mil in liquidity, decent liquidity, 1%, no, 2%, give or take, a little less than 2%. That's not horrible. But what gets me is this. That's a big deal, ladies and gentlemen. Why? The only thing better than hitting a winning trade in crypto markets or a winning bet or a winning investment is free. So airdrops were always a big deal. So chain expansion, big deal. So you want to own the core of what's going to give you free. So Arrow is not going to give you shit other than third party drops, which is what we're hearing from that Solana VE33 exchange. Velodrome has given you Fractal, Lisk, Metal, Polynomial, Mode, Bob, and every other damn super chain that's yet to come. That you get in Velodrome, and that's free. So if you're looking at Arrow in the short term, oh, big narrative with Coinbase and can be literally like U.S. government treasuries online all goes through Arrow, or international global crypto markets on optimistic super chains. And there's 10,000 optimistic super chains, and Velodrome just automatically gets deployed on all of them. All right, great. So I like the chain expansion narrative. I like the own one thing, gain endless exposure to everything type narrative. So the last thing I want to crowd into is one thing that doesn't offer free horizontal exposure. And in that regard, it's Velod. So the two that are most interesting from an exchange standpoint are Velodrome and Ramses, because that gives you your free horizontal exposure. Um, Anywho, let's keep going through the commentary, but love this presentation. You know why? Because it's simple and it's money and it's our base. That's cool. We could see some wild reflexivity where this is 200%, 500%, and then it gets diluted. It can get really weird. And this is basically how the Eurodollar market just gets inflated and goes through these expansion cycles like the contraction, the ice death of the um keep it going. Let's keep it going. Trying to understand what a bear steepener means for DeFi. Uh, it means the long end. It's the treasury market blows out in yields. People are dumping it, which is a return of a healthy yield curve for the banking sector. But you got to remember, we just had an inverted yield curve, and the inverted yield curve has predicted the system exploding since the land before time. So a bear steepener is the yield curve on inverting, just from a perspective where the markets go absolutely parabolic, only to reveal the underlying weakness in markets with the collapse of employment, especially full-time employment as compared to uh, part-time employment. So we have this hollowed out economy that rears its ugly head in about 1, 2, 3 years time, and everything falls apart into a collapse of deflationary decay, and it all is heading to the abyss at the bottom of the ocean. You gotta drive yourself nuts, my friend, thinking about it going up, it going down, bear steepeners, bull steepeners. Don't do it. Don't do it. So my reductionist mentality requires that I understand very simple things. Buy shit, buy shit cheap, buy shit that pays you at cheap at the best price possible. Save, accumulate during good times, because when there's bad times, hopefully you can make 30, 40% on your money, which is kind of what we just did over the last 2 years, huh? And then when everything's falling apart and the world is getting washed over with chaos and anarchy and the financial system is in shambles, then you buy shit super cheap. And that's it. That's just don't worry about when the system's going to fall apart. China's literally falling apart, and they're trying to get themselves out of it right now. Uh, I could show that stuff. I mean, look at this chart. This chart's insane. That is a collapse. You're talking about between 2020 and today, 13%. That's 5 points on 13%. It's like 35. What was that? 5 points on 13%. The 38% collapse in credit issuance in 4 years. Wow. And again, was it year over year? Yeah, cumulative. Wow, year over year. So it's 8%. I don't know how to interpret that. I'm trying to think about how to interpret that. Year over year growth. So this is a disinflation. As a collapse of sorts. So year over year loans, year over year, 13% more, 11% more, 10% more, 8% more. So it's a disinflation. That's where we are in this financial system, ladies and gentlemen, where disinflation is a collapse. You realize what that chart says. And this is what has them panicking. People are borrowing less. People are fearful. Credit is contracting. And that's pretty wild to think. But bear in mind that also is significant. If credit's contracting 6%, what's next year? 5%, 3%, and then 0%. So they're more interested in the trajectory rather than the actual level. So if you see year over year and you're horizontal at 13% until 2020, you're like, all right, that's cool. We're doing well. We're at 13% horizontal growth. What catches their fancy is the downward trajectory, more so than 8% or the disinflation. Hope that helps. G Money, yes, indeedy. Max Profit. Captain just started using Copilot Microsoft. It's a game changer for me. AI of any sort's a game changer. I encourage anyone and everyone to use your AI. I just endless conversations. I use it for all my legal documents. To write anything you want, you have to talk with it and tell you talking about the logic and semantics of court cases, and you know sh- it gets lost a bit in very large documents. So you do have to do isolated structural work section by section and tie everything together using your own individual capacity. But it certainly spits out very nicely structured sentences, which you still have to review and modify and enhance and optimize and make sure it actually is coherent. But look, you could say, assess the coherence of your conclusion. So what I like to do is stuff like this. Uh, so I would literally paste it. Uh, um, Identify uh, common ways to uh, uh, qualify coherence and apply a grading score of 0 to 10, with 10 being maximum. So that's an interesting thing that I like to do. So I like to get it thinking, and then that gives me feedback, and that allows me to do work better. So I'm not really letting it do work. I'm letting it help me do work. But this is a great way to improve a conclusion. That's coherence, score it 0 through 10. And then it's like when you get that feedback, you're like, all right, eights, all right, optimize, maximize coherence for 10 in all categories. And now you just had AI recursively or iteratively improve its own argument, because then you could watch it next version, next version, next version, and it's doing work. That's very useful. Anyway, hope that helps. Bo, Teddy, regarding Kingdom on Sonic, what would cause market share to divert from equal already existing VE3? It doesn't need to divert. What folks need to understand is how microscopic all of these markets are. Uh, the amount of capital in equal, the amount of capital on Phantom currently is zero. The amount of capital on Ethereum mainnet is zero. That is what folks, where am I going? Analytics. That's what folks need to understand. Stables. Where we're heading, Phantom. That's 320 million. When does this have a 320 billion? You're not going to care what 320 million means because it's a drop in the bucket. And this is a trillion. And Arbitrum's a trillion. When base is 1.2, and because Coinbase is, oh, I'm going to make base the super chain. And when Fractal has a billion, when Ethereum mainnet has 1.5 trillion, no one's going to care about these market caps and these TVLs right now. That's what I invest for. That's the time horizon I'm interested in, which is the great repricing, the monetization of this space and the fintech products in this space. That is big picture. In my opinion, I think permissionless credit is the most profound DeFi product offering. The best way to understand the power of owning assets. Gen Pop just doesn't get this yet, but they will, my friend. They will. And once they do, which they do every cycle, because there was a lot of leverage on Abracadabra last cycle, and that was a relatively early stage credit facility compared to what is now with Spark, MakerDAO, much more advanced. Go, built right into Aave, CRVUSD, and its marketable advanced liquidation prevention mechanism, allowing for much greater leverage and a significantly reduced liquidation risk profile. Or the highly marketable DeFi money, a variant of CRVUSD that is very sellable to the degenerate cohort. This cycle is going to be weird, dude. It's going to be so weird. It's like 2020, but ima- um, imagine driving down the highway, seeing 50 billboards all offering extreme deals on credit, loans, financing, per- percent savings, uh, enticing marketing, AR 16 by 9. All right, let's envision it. Let's envision what this next cycle could be like. Well, let's see what it comes up with because maybe it's not accurate, but maybe it'll give us a good picture. Maybe it'll be prophetic. It only takes a second or two. Because that's what it's like. It's like credit, discount, interest rates beyond belief. Oh, I thought it's maybe something a little bit more exciting. Gave me something very realistic though. But that's what it's like. Can you imagine running through base and it's like 3% here? Oh no, I could get 1.5% over there. Oh, I could get 10x on my leverage and triple loop it. I could loop it through 3 times and triple my exposure to Ethereum. I want to triple my exposure to Aerodrome. Oh my God, where all this is going to be, dude. I can't wait to see it. Arrow, so tired of points. What's their timeline to farm users with points? No idea. What else is there to do? What else is there to do? Do we want to adjust positions? Are we selling something to buy something? How much can we do that? How much can we do that? So it is what it is. I I I, I have no problem sitting and waiting. Use corn is on the list of interesting stuff. They've been talking from an arbitrum perspective on social media today. Use corn. So this is Badger's Bitcoin L2. Just, this is obviously entry level or initial stages from a points marketing system. But whatever Chris, I've talked to him a couple times. Um, whatever he has up his sleeve. Oh my God, could I type today? Could be very interesting. See, a lot of stuff going on with corn. So apparently there's a pendle. I don't know, whatever they're doing, but very interesting. I think used coin is very interesting. Anywho, I share your discontent with reduced revenues and points, which literally are no revenue. And I remind myself that the vast majority of people don't understand anything about what's going on. So when I see, so like that's the thing. That's the thing. You got to remember, what for a person like me, when I see this, I'm like, most people are like, scam. And that's literally general public, though. They don't understand it at all. When I see this, I'm like, oh my God, 45%. And then you look into the doc. So imagine the way I was reading this when I was trying to understand what this is 3 months late. So I was 3 months late. And then I get into the docs. I don't see, oh, then I see, oh, CRV-USD architecture. Oh, that's interesting. Because what's my opinion of CRV-USD architecture? And then what's my opinion of dollars? And that's what's my opinion of the different architectures. And interestingly, Beebus replied to me, wherever. Here it is, Beebus. Beebus followed me as well. So they're obviously working on some interesting stuff, I'm sure. Old school crew. So he wrote, him and crew. I don't know who wrote the paper, but we'll take a look real quick. Uh, open PDF in browser. Continue it down. Already a member. Download without registration. Thank you very much. I think I did create an account, but who wrote this? Download. I'll open it. Autonomous money supply strategy utilizing control theory. Yuval from Conclave. This is a heck of an article, and it goes through the list of the stablecoin architectures, starting with liquidity V1, a clean CDP protocol using pure Ethereum. 2021 tech maker DAO. This starts from the beginning. This is a heck. This is one heck of an article. Security, scalability, decentralization. Peg management is really that's this article hits home on that. Liquidity V1, Aave Go gets on the line, some nice inspections, and then you got the new version of Liquidity V2 that just came out. Um, the interest rates do not necessarily mitigate the risk of redemption. That's the variable interest rate model is why Curve catches my fancy the most. The adaptive, notice the open there. When I read that, I'm like, all right, other people get it. The adaptive interest rate. And why is that? Why does the Federal Reserve increase interest rates to stop people borrowing? What happens when Curve USD Bitcoin deposits shoot up to 80% interest? Nobody's going to lend, so it slows down monetary creation to manage the currency supply. That's literally what the Federal Reserve is designed to do from an interest rate policy perspective: manage the currency supply. So literally, we're talking about monetary policy built into these smart contracts that manage the damn money supply better than our fucking federal regulators, because they don't have a capacity to jack the interest rates, albeit from a societal perspective, jacking the interest rates to 80% is probably going to cause some serious convulsions. Yeah. So that's, but I get a serious kick that it's all done automatically by deterministic smart contracts. Um, they really went in on CRBUSD, by the way. Isn't that interesting? Um, this is a very interesting paper, and V2 as well for bold. But I'm more interested in CRBUSD's implementation. I think I he nailed it. He got it. And we could probably do some variations, and they're going to iterate on it. But I really think he nailed it. The variable interest rate model. It's just how do you prevent the run on the currency? You force people to stop spending it. You realize what that means, ladies and gentlemen. If you borrow, if there's if your peg on CRBUSD is at 0.95 and you want to make it more expensive, you got to prevent people from spending it. What does that mean? So if you borrow CRBUSD and you want to buy USDC or Ethereum, whatever, doesn't matter. You're spending it, and that's going to drop the peg even further. How do you prevent people from spending their money? By increasing the interest rate. And you keep increasing the interest rate until they actually stop spending their money. And that's the whole point. That's why that algorithm, which Frax has a component too, Fraxland should be could probably deserves reference here. Um, I think uh, I think it's comparable, probably to say the least, but not like the robustness with the soft liquidation model. Um, very, very interesting. Anywho, hope that helps, ladies and gentlemen. Bo, much a pleasure. Lucian, me too. Arrow, no timeline. Yeah, there's no timeline for anything. I mean, use coin. I mean, look at all the points getting thrown around. What was it? Hyper Velociraptor on Blast. I hate points too. But it's not the points that interest me. It's and it's not the speculation on what the points may be. It's what they're doing. Deploy to base makes sense. And a layer zero um, OFT implementation is certainly very interesting. When you go over here and you see bridge, it's like boom, it's just right there. Base arbitrary optimism, OFT standard. That's very interesting. Certainly very interesting. Hey, Cap, can you explain how DeFi money generates rev using peg keepers? Well, peg keepers. So let's just here. Check this out. Um, so check this out. 0.999 compared to one. It's basically on peg, even though there's a difference in balance, which is exactly the power of Curve Protocol, concentrated liquidity in there. So, but if you are at like 9.9, stereo, that's meaningfully off peg from a dollar stablecoin perspective. What you need to do is that means there's not enough. Let's say CRV USD is at 0.99 and money's at 101. So that implies that there's a deficiency in CRV-USD and it's more valuable. So how do you decrease the value? How do you devalue a currency? You print it. So the peg keepers would, if you're at 0.99 on CRV-USD and money's at 1.01, the CRV-USD peg keeper comes in and deposits freshly printed CRV-USD. So now there's a debt. So the peg keeper issued debt into the liquidity of this FX market, just like if it was any FX market around the world. Central bank intervention to manage, you know, currency, cross-currency pairs. And then the opposite would occur because money is a CRV USD variant. So if money ever was at 0.99, the same thing would happen. And that's exactly what I wrote here. So this is just a weird. This is the only time it's ever happened because you really need this type of mechanic, and maybe with the fracks and their AMOs, I don't know if it does the same thing as the peg keepers for CRVUSD. But the point is, neither one of these dollars can become significantly more valuable than the other without triggering the respective peg keeper. That's weird. Two separate systems. And that's all transactions, transaction. You know, arbitrage, and all there's fees everywhere. And then there's interest rates because there's debt. Fascinating system. You can imagine the ticks and the not just the calculations, but the quantification and the tabulation of all the values. You saw them on like a scoreboard, like bing, 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 bing. It would be quite fascinating. It's so dynamic that you probably can't even inspect it as such, and the appropriate inspection is exactly as Mitch and folks choose in graph form. Hope that helps. Um, DeFi money should accumulate VEL and Arrow to incentivize liquidity, but I don't think they will because of curve alliance. It would be a great strategy, though. It's unknown how everything will play out into the future. Obviously, governance is meaningful, but look at what we're experiencing with Convex. What's the governance if I don't know. I don't know what it all means. All I know is what is and is not interesting. And I pretty much put Velo, Arrow, Curve, Balancer, Aura, uh, a Kingdom out. The V33s I put it's still in the same category as the VEs. Camelot. They're all in the same category. It's all incentive liquidity financing. That's it. Notice how I'm not putting one in a different category of liquidity financing. It's all liquidity financing. And all that capital will slush over and bounce around. It'll move around from exchange to exchange and market to market, doing uh, interest rate arbitrage or interest rate from an LP perspective, interest rate from an incentive perspective. It's interest rate arbitrage. Whole system is going to get flooded with capital, gets monetized, and all the money starts circulating as they describe it with monetary velocity. And then the capital is just looking for the best opportunity possible. What plays out? Dyad's in there. Dyad's over here. Yeah. A very interesting take on capital efficient stablecoins using additional token to reduce collateralization requirements. Yes, it's on the list. I believe this is the entire list. At least the very popular ones? I can't really think of anything else. They got dollar, frax, money, CRBUSD, MIM, MY, Go, Dyad, DI or USDS, and this is not related. And that's it. It's 9 protocols. 10 protocols now with frax. They didn't have it up there. For the entire crypto space. And everyone's out there chasing whatever the hell they're chasing. Yet we've identified 10 protocols that represent the biggest business on the planet and the expression thereof across these crypto markets. That's pretty damn interesting, if I may say so, and I'm saying so. Any thoughts about Veradrome? I've been kind of confused. I just don't care. I don't care. They give me an airdrop. I'm buying it. An airdrop. They want me to care. God bless. That's the extent of thought I'm going to give it. Take push share, old school McMahon in the house. Paralysis by analysis. There's way too much in 20 now. Imagine the complexity we have in the market now and having to put that into the context of 2020. and having to put all of that into the context of what there was in 2019 and how it all started in 2016 and 17 and the overall encompassing reality of where Bitcoin came from in 13 and earlier. And then accepting you really can't be comfortable investing in these markets until you have somewhat of a decent perspective and comprehension of all that shit. But that's literally what we talk about, and the fact that I was able to express that arrangement of time frames to you means that's the perspective that our entire conversation always comes from. My man. And it's easily to get paralyzed in trying to understand all of that. Spelling is hard, yes indeed, my friend. So blunder, can you suggest some entry level economics books? Economics, economics. You want to understand, it's not a book. You want to understand dollar liability. You want, okay, here. Not even books. ChatGPT. ChatGPT, and you're going to have to ask questions. I want you to open ChatGPT and I want you to type this. Teach me about double entry accounting and how banks take on assets and are required to sell liability required to balance their books with liabilities to meet regulatory requirements. So I'm going to give you a paragraph. I'm going to put it in the commentary for the stream. You got to ask questions. Keep asking questions. Keep asking questions. There's no book that's going to teach you this. Um, the liabilities are dollar, uh, the deposit accounts are those liabilities at least partly. Uh, how do commercial banks print dollars in the context of double entry accounting? I don't know. This is just shoot from the hip type of question. So that's a great. I hope this all goes through. Yeah, it put it through in two questions. So crypto blunder, this is the type of question you're not going to get this in any book. This is like Jeff Snyder cross with like a George Gammon cross with someone who talks about Eurodollars, which is probably not Raul. That's way too soon. Uh, uh, talks about. I mean, George really loves to talk about double entry. He loves his double entry in three quick, fast steps. So that's a great way to get a perspective on double entry accounting. But this is banking and how what dollars are. You got to know what dollars are, and the only way you're going to get it is from AI. Otherwise, it's just a waste of time with trying to read books. Like literally, you asking this question to ChatGPT is going to give you an answer. I don't even know how you would get it from a book. I don't know how you would get an answer what it's going to spit out. I'm curious what it's going to spit out. Yep. All right. Debit credit. Great. Asset liabilities plus equities. Great. Great. Asset. What a company owes. This is just such a robust answer. You know how many books you would have to read to get this kind of answer? You need an accounting book. You need a banking book. You need a discussion of regular banking regulations like OCC type shit. Uh, customer deposits or liabilities. Oh my goodness. I mean, look at this. And then what you do is you ask questions. Question, question, and don't stop asking questions until you have an understanding of what a dollar is. Oh, look, let me know if you'd like to explore any of these concepts further. Thank you, ChatGPT. I will not be needing that from you today, but I'm proud to say that I have recommended you To everyone listening, please do this. Please take that commentary I put in the chat today and do exactly this with ChatGPT. 4.0 work fine if you have access to it. There's a lot of models. 0.1 preview will probably get a little technical. How is how this money is used? Borrowers spend the loan, transfer it to other bank accounts. I mean, this is imperative to understand. How do you create dollars? Every double entry accounting is everything. Banks take on assets and liabilities, maintaining this balance to meet regulatory requirements. That means they literally need to print a liability if they don't have balanced books. If they have $100 billion imbalance between assets and liabilities, they literally need to sell loans, which is basically creating deposits on their on the li- well, bank deposits, which would be liabilities, which means they owe dollars. So they created dollars by owing dollars. And how do they get them? If they need them, they could transfer reserves, they could transfer assets to another bank, shell game with regard to balance sheet composition, and to such a degree that the banking system doesn't even really fulfill or provide dollars. Because if I have like $1,000 deposit in a bank account and I pay a credit card, they're literally just transferring the liability for the dollar. I'm paying the Visa card with a, the liability, the assets and the liabilities on the bank balance sheet. And the bank is literally shifting the liability to Visa. And that's the payment. It wasn't even dollars. It was just a liability for dollars. So important to understand because that's stablecoins. And that's just crazy. That's the biggest business on the planet. That's a great question, crypto. Please come back and please ask these types of questions. And very curious on how how you feel and respond to the answers that you get from AI because this did not exist just a few short years ago. Really strange world we're in right now. Buddy Lawrence, hey Cap, sucks having to pay 50x on airdrop. 50x? What do you mean? What do you mean 50x? Pay 50x. What are you paying? I don't understand. Um, having to pay. I'm curious. Probably will though because I want to be a part of it. That's okay. So just remember, it's part. Oh, you're talking about 50x compared to a discounted price. It's okay to want to be a part of it, and you can have a decent position size. So here's the thing, and I'm going to end on this topic because I got to go to a meeting. Here's the thing: if this is Arrow pancake, hold on here. Here's the thing: 885 mil. Take a position size. A position size is a position size. If you buy 10 grand of it today versus 10 grand of it at 40 cents, great. It's 10 grand of it. What's your expectation? That's everything that matters. If your expectation is to turn 10 grand into 5 mil, is it more likely at the expensive price or the cheaper price? What is the potential and what are the odds? Because the only thing wrong about taking a position is having unreasonable expectations. Oh, yeah, certainly went up a 50x. Well, that's a good statement, though. You want to be part of it, even though it's a 50x, because it's not 50x, but it's like 20x. Yeah, it's up from 4 cents, give or take, as the ultra lows. 2 cents. I find that as a 50x, more than a 50x. Someone sitting on 75x on a fat bag of Aerodrome that they bought for 2 cents. Fun fact, fun fact, fun fact. So, no one ever said this game of capital management is easy. And you're absolutely right. All right, let's wrap it up for today. It's a Wednesday. It's early in the week. We got another Friday. So we'll continue this conversation. Please bring your questions. Uh, If you have anything on your mind, always happy to talk about what's on our minds on a Friday. Wednesday, October 16th, 1:55 p.m. 187 people made it to the end of the stream. Each of you a little bit more rational today. I appreciate each and every one of you. I wish you a good one, and I will see you later this week. Till then.